So my
Hi.
thought. Oh, hello.
Yes, Siam, it's Brad here. Sorry,
Oh,
bud.
hi, mate.
A, a quick question on does this take into account sort of the volume of money that's now out there? Given they're printing so much money, obviously you have a larger volume of money that needs to be flowing in some way, and a large portion of that doesn't appear to be moving at all, and definitely not making it through to us, the end sort of consumers, etc. It's sort, it's stuck somewhere along the line to getting to us. Would that be fair to say, or?
Um, so I think it's a bit of a misnomer, and I'll probably need to make another video at this in depth because not a misnomer. I think it's a slight misunderstanding. A lot of people think QE equals big sort of capital increase. Okay, and so and I see this with. I've met fund managers that believe this, by the way. And when you find a fund manager that believes this, that's scary, because they should know better. And so this is the flawed logic. And by the way, I used to think this as well. Okay, so I'm not all high and mighty. I have misunderstood QE in the past. So this is the logic that you see. Like, if you have this as your base data that you're forming an opinion on, you then try and make logical decisions based on that. So you go, right, well, if QE is going up, well, what that means is that the US dollar is going to die, which then means rates, or actually, let's not jump too fast. If that goes down, stocks, etc., gold, silver, everything goes up. Let's just keep it simple. And so you would then make investment moves based on this. But look at the data. Look at the actual truth out there. And you can just look at the US dollar index. Let's look at the weekly chart. Okay, so we have had, if we look at this here, okay, so we have actually had a bit of a fall in the dollar since March, okay? And this is because this was not due to QE. So this was actually just actual governments doing old-fashioned printing, or not printing, but just like the UK's done the Corona business interruption loans, the bounce back loans, the furloughing scheme, etc. That is, and the US has done, their payment protection plans and stuff like that. So that is a form of where the government is, trying to flood the market with money. Okay, hence the dollar had a bit of a wobble. But we've been doing QE and all sorts of stimulus for years now, not just 2020. We've been doing it since 2012. Well, in fact, look at 2009. That's when they did try and inject it. But then what's happened here? As you can see, from 2011 onwards, we've had a massive rally in the dollar. And it just doesn't make sense. Yes, in the news, people think, okay, we only had QE and stimulus from 2009 to 2012. And then it stopped. But it didn't. They're still pumping stuff. And the reason they had to keep on pumping stuff is because of this chart. One second. That chart. So we had the subprime mortgage collapse in 2008. Everyone thought we got out of it in 2009, simply because that's when the stock market started going up. Whoopsie. But the real economy, which is MV pretty much, just kept on falling. So they've had to continue printing, in bunny fingers. So it hasn't actually stopped. Which means, so going back to your question, the dollar has just kept on rallying, and so so this is flawed. So what actually happens is that QE is not money entering the economy. All it is doing is the Federal Reserve is basically, let's say this is the Fed, and let's say they're talking to Goldman, okay, Goldman Sachs, and they go, hey Goldman, we would like you to buy up all of our debt, blah blah blah, on behalf of us. We'd like you to buy loads of government T-bonds, government treasuries, so treasury debt, and you can do it on our behalf. But what we'll do is we'll open up an account and we'll call it Goldman Sachs account, reserve account, etc. And we'll make this unlimited. You have unlimited money. Go and buy government T-bonds. So when you see in the papers that they're printing, or they're doing some sort of stimulus, whatever, and whatever number it may be, 85. I mean, at one point it was $85 billion a month, and I mean this is always going to go higher, but they're not printing it. All they're doing is they're going, oh, we have an account here for you with pretty much unlimited money. Go and buy corporate debt. Go and buy everything else. So no money's actually entering the economy. And what actually happens is that money is actually, or actual hard dollars, it actually gets hoovered up by this. So what this means is that because a small amount of hard cash gets hoovered up in this and locked in, for capital requirements, capital adequacy requirements, etc., that it basically gets taken out of the currency supply, which actually then exacerbates this MV. So this is another reason I am massively expecting a rally in the dollar. I mean, this is the weekly chart. I eventually see the dollar getting so rare, so to speak, that we'll have a dollar shortage. So we'll see dollar rally.
Because there's low supply of dollar actually in the marketplace. Everything's just sitting with the Fed and
everything's credit at the moment. Yeah. There's no dollars.
Yeah.
And that's all they're doing. So it's not just Goldman Sachs. The Fed is going, right, where's my pen? Every other bank, or the four primary lenders, you've all got unlimited money. Go, buy everything up. And so they're buying everything. They're buying, residential mortgages. I think the Fed owns 20, or was it 25% of all US residential mortgages right now? They're buying up corporate debt. They're trying to get get their fingers in the pots of other companies. They're buying everything because eventually they then have control of it. If they financial control of it, but you effectively control what is financially obligated to you, so to speak. So yeah, I guess. But here's the thing that curses me. I say this all the time. I'm always in too early. Always. Just because I'm looking at this, because I'm a geek, and I obsess over stuff like this. So I see things, and I am normally right. I'm not blowing smoke up my own ass here. Is it smoke up my own ass, or I'm blowing up my own trumpet? I don't know. Same thing. I'm not blowing up my own trumpet. I am normally right. It's just my timing hurts me sometimes. So I guess a good indicator for you will be whatever I say. Your own indicator will be put a time delay on it. So whatever Siam does, just wait a month or two and then follow. That wouldn't be a bad filter. So yeah, so what's actually happening is this. So QE equals capital decrease, or not, it doesn't decrease, it doesn't destroy it. Capital lockups, I would say, is a better way of putting it. And so when you then use logic based on this, QE equals big capital lockups, as in it doesn't enter the economy because it's just locked up as in a reserve account in the Fed to somewhat back all the things that they're buying. This is more likely that that actually means dollar shortage, which means dollar goes up in value and then stocks crash. So it actually leads you. So even though someone can both agree that QE is happening, the economy is going to hell in a handbasket, one person will go, oh, big capital influx. Someone goes, big capital lockups. They end up with different actions because, yeah. So this is why, you just don't know what you don't know. And I've made this mistake just because, I mean, there are a million YouTube videos out there of YouTubers going, QE, wow, blah, blah, blah. And a lot of YouTubers are making this mistake. QE equals big capital influx. It isn't. Unless it is literally just like the government doing business bounce back loans and stuff like that. I mean, that is money hitting the economy. And the furloughing scheme, that's money hitting the economy. But that's a very small percentage. What else is there? So that is that. Does that make sense? Oh yes, I'm just reading the chat box. Rob, I see Starling Bank introduced negative interest rates recently. Yep, exactly. I mean, this is just the tip of the iceberg. Tip of the iceberg. Don't forget there will be capital controls at some point. They're accelerating that whole cashless society stuff. Like pretty much every shop I go into these days, they only take card, and it's just becoming ever increasingly normal. Ellie tried to get £500 in cash out from the cash point today, got rejected. She tried 350, rejected. 300, rejected. 250. She was only allowed £250 out of the account in cash. I don't know. Let's move on.